Well, good morning. I just want to thank Justin, the First Peoples Fund, Fox and Colby for inviting me to share my knowledge with you today and experiences. I hope you're ready for something different. And you probably never thought you'd be excited about learning about taxes on a Saturday morning in Santa Fe. So many other fun things to do, but we'll spend an hour or so. And, kind of feel in a bad spot because Cara gave such a wonderful presentation and she's a hard act to follow. But she did pose some, questions about the fun topic of financials and taxes. And after all of you are here today because you received grant money. And we'll talk about what do we do with that, and we'll answer all of your questions. So I want to keep it informal. If I'm going to keep my eyes on you, if you have a question, raise your hand. If I get bogged down in terminology that you don't understand, I've tried to avoid that. But if I do, just, tell me, ask me a question. And hopefully you'll walk away with some useful information. It won't be beautiful. It involves numbers, a few equations, and things like that. But I think we'll have a good time. Okay. So just going back a little bit, my name is Amy Atzel. My middle name is Hobbs. It's my grandmother's last name, and she was an orphan at 10. Both of her parents died, and so she was raised by her aunt, and she was actually quite artistic and resourceful. They furnished their entire house. So this is sort of during the Depression, with items from Goodwill and Salvation Army. And so I really appreciate and value all the upcycling and recycling that I saw yesterday in the fashion and the artwork. So, but just going back a little bit, it was around 2005 when I quit my day job as a scientist / patent science advisor, actually, for a law firm where we did patent litigation. And I've always been a violinist since I was a kid and art enthusiast, but I don't think I'm very talented. So when I see all of you here, I'm just hats off to you. Keep it going. Don't worry about taxes. Have someone in your corner that can help you with finances, but focus on your art and your work. I moved back to Cincinnati, and I love Minnesota, but I grew up in Cincinnati. My parents just turned 90, and I want to spend some quality time with them, before it's their time for their journey. Okay, so we're going to talk about a lot of best practices. We're going to talk about how to set up your business. We're going to talk about bookkeeping, income and expense tracking, as well as time management. It's really not that hard. But first, and that's assuming that we're all considering our art practice a business. Doesn't have to be. So you want to ask yourself, and I want to just get into this, but before we go into all the spreadsheet details and everything, just ask yourself, so do some searching and say, hey, is your artistic activity a business or not? Doesn't have to be. Do you make money? Do you have, here's the killer. Do you have a profit motive? You don't have to have a profit motive, but if you do, that's one criteria. And I want to read this quote. This is from a 1981 legal case. And a lot of art business, what you need to ask yourself is, what is your intention and how are you behaving? Because I'm going to read this. The manner in which the taxpayer carries out the activity, the fact that the taxpayer carries on the activity in a business-like manner and maintains complete and accurate books and records may indicate the activity is engaged in profit. Okay, so if you have a profit motive, you want to know, if you're profitable, right? How much did you spend? How much did you bring in? The difference is called profit. And it's within the context of your business, because where an activity is carried on in a substantially similar manner to other businesses of the same nature, that might, even though it's very, very different from some other business, doesn't mean that it's not profit based. Let's say you haven't been, let's say you've lost money on your art, but that's also okay. Businesses have losses as well, right? But you can't do that for too long, because then the IRS will want to talk to you and ask you if your business is really a business or not. And we'll talk about some of those things. But let's just say you did have like this case here, had a conversation with the IRS, and they've decided that, well, if you've abandoned unprofitable methods in a manner consistent with your intent to improve profitability, so if you're losing money and then you're trending towards profitability, that's a good sign, or already profitable, even if it's just a little bit, those are all good indicators of whether you're treating your art practice as a business or not. So, whether or not it is a business, your art income is considered taxable. There are a few types of income. I don't want to call it income, but money that you may receive, like a gift, would not be taxable. But anything that you sell, or if you provide services, that's going to be taxable income, even if it is a hobby. But the difference between a business and a hobby is really comes down to how do you treat the expenses, the supplies that you buy, traveling, and there's a difference in what is taxed. So if you're self-employed, there's this something called self-employment tax, Social Security and Medicare, so that you have to deal with that if you're a business, not a hobby. Some other differences. Hobby expenses are not deductible. Business expenses are deductible, which means that your expenses will offset your income. So let me just look at I'll just go on. So let's move on. And so we've decided that our art practice is a business, and this is how we set it up. Best practice. It's not a complete requirement, but this is just the best way to operate. So open up a separate bank account for your business. You don't have to have an LLC. It can just be a personal account, but you want to separate, so all of your business income should go into that account, and then all of your expenses should come out of that account. You're gonna, when you set up that account, they'll give you a separate debit card, or you can get a separate credit card. I actually have 2 credit cards. Yeah, go ahead.
I went to set up a separate account and with the intentions of it like being your business, and I told them also that I wasn't sure if I was planning on getting an LLC or not, and they were like, well, maybe you should wait until we bring in, like, the bank has like people who can open like an actual business account for you. But I just wound up opening a separate personal account. Is there a difference if you don't have an LLC?
Not from a tax perspective. So mathematically, money-wise, there won't be a difference in your tax return. There is a legal difference because you're a business. An LLC is a business entity with a separate EIN number, which is a tax ID number, but once all of that gets onto your tax return, because we're not talking about corporations or S corporations. So this is all going to be your personal tax return. It all goes on the same Schedule C. doesn't matter, yeah. Yeah, so separate your expenses. Don't use, like, if you're buying supplies, don't use your personal credit card at Target or wherever you buy your supplies. Have a separate, I have two credit cards. One, I put a big P on it with a Sharpie. The other one is B for business. So every time you make a purchase, you're going to think, okay, is this business or is it personal? And then you're going to know. So when you get a statement from your bank or your credit card, that's all business and not personal. And the IRS does like to see that. Yes?
Sorry. With getting a separate credit card, would you recommend getting those specific business credit cards so you can earn like points, or can it just be any type of credit card?
It can be any type of credit card. If you do have an LLC with an EIN and you want to open up a commercial bank account, sometimes they have higher fees, sometimes they have transaction limits and things. So it just depends on how much you want to, go for that. But what was your question then? About?
It was a business
The business credit card, right. So if you've already done that, you may as well just get a business credit card to go with it. But it can be a personal credit card that you just dedicate to that, either way. And I think you'll find if you keep it on the personal level, the expenses are lower from the banks. I mean, sometimes they charge monthly fees for commercial accounts. Yes?
So I'm curious, when would you feel like you need to have an LLC just versus sole proprietorship?
That's really a legal question. And I'll give you my sort of lay, it's an attorney, but it is a question of liability. So if you feel like you have exposure, so I have some clients who are therapists, personal therapists or psychologists, and they have their own practice, and they have an LLC because so when you do have an LLC, you definitely want to keep everything separate, because once you've separated your business from your personal, someone who decides they want to have a legal proceeding against you, they only have access to your LLC and not your personal. So there's benefits to having an LLC that are unrelated to taxes, that has to do more with legal reasons. So if you feel exposure, or if you're uncomfortable, like if you have a house and things like that you want to protect, keep everything separate, because if you get in some kind of trouble and you have not set, you don't have an LLC, your personal assets could be exposed to whatever legal action. So it's just a safeguard. Yes.
I could give some art-specific examples. For me, I'm a curator and a writer. Like whatever I publish, if somebody were to sue me saying I said something bad about them in writing, that's why I do an LLC for that. Or if you're, say, you're employing people to work and help create your work, doing an LLC could protect your personal assets from any kind of dispute with a volunteer, an intern, or a contractor. Or say you sell a piece of work to somebody and they say you misrepresented what you made and what you sold me, and they sue you, they can't go after your personal assets, they would just sue the LLC.
And to underscore that, the way to make that work for you, and I'm going to keep repeating this so many times, is to keep your business finances completely separate from your personal. The moment you have any commingling, you've destroyed that. So that's why it's just important. Be as careful as you can. Yes.
So do you recommend setting yourself up to pay yourself with a check from your business?
Are you talking about being an S corporation?
No, an LLC, but I do have,
you know, I'm just wondering, I put everything into the business account, and I'm wondering if I should have an accountant create a paycheck for me out of that.
No,
Okay.
don't need to. It's your money, you do whatever you want with it. You can move it to your personal account. At the end of the day, whatever your profit is, that's going to be what you're taxed on personally anyway. So it doesn't really matter what bank account it ends up in. But don't pay your rent or your mortgage out of your business bank account, of course. Move it to your personal. Yes?
Maybe one of the things that I do with my business account is I do an owner draw. So when you're withdrawing money to pay yourself, you do an owner draw from there. And that's kind of how you track that.
Yep. You can, if you're just transferring money, you can label it or track it, and I'm gonna show you a spreadsheet for some of those items. But even if you don't have an owner draw, whatever's left in your bank account, if it's in business or the personal, that's where your taxes come in. So, okay. Find a bookkeeping system that works for you. By the way, in your bag, there's a folder with handouts in it. The whole presentation is in there, but I just wanted to draw your attention to a couple of pages. One is excuse me, I'm gonna put this down for a second. Just a list of documents. So just look through that. If you have any questions about what those are, you just let me know. And then we're going to spend a little bit of time. I know this is highly detailed, but a little bit of time on this spreadsheet here. So pull it out if you want to. And then there's also a copy of Schedule C in the folder as well. And I'm going to refer to those. And it's going to be on the slides. So the spreadsheet is free, and I share that with all of my clients electronically. Some people have their own system, like an app, or even QuickBooks, but those, like QuickBooks, is not free. And I actually don't use QuickBooks myself. I get a lot of QuickBooks output, and if you know how to use QuickBooks, you feel comfortable, you know what goes in, you know what comes out. So I've seen a lot of, garbage in, garbage out coming from QuickBooks with negative number, a report called a profit and loss statement is what I would need. A profit and loss statement and a balance sheet. And I can prepare your taxes. But if you don't feel comfortable with QuickBooks, then don't use it. I think there's a huge learning curve with it, and I think a spreadsheet is easier. That's just my opinion. But I'll take whatever format, you have your business records. That's really what I need. If you have a way of organizing it, just so long as we're communicating, that's really what matters, and that you don't spend too much time. So I'm sort of assuming that most of you are going to be doing your own bookkeeping, and even if you're not, or if you're just starting out, I think it's good to do your own bookkeeping. Then once you've become CARA, or you're like in mid-level, or even you need to hire someone to do your books. So then once you understand what bookkeeping is, then you can hire someone, because then you'll know what to ask and what looks right and wrong, when you see the output. Okay. If it takes you, so here's what I recommend. If you look at the spreadsheet, there's 12 columns, one for each month. I recommend doing your bookkeeping on the first of the month. Why? Because the prior month is over with. Guess what? No more income that month, no more expenses. We can close out those books. So write down, and you can go directly to your bank account and record. And this is exactly what I do. I'm just sharing my own practices, really. And it's the first thing that I do when I wake up in the morning. 7 in the morning. And then once I'm done, I can enjoy the rest of the day. So if it takes you, it takes me about 30 minutes to do my books. So I've got it down. But if it takes you more than 2 hours a month, then you should find a new way. Because that means you're spending too much time on it. You don't need to do that. Okay. So Schedule C is what goes with your tax form 1040, which is the main form. There's all kinds of schedules. There's Schedule A, B, C, D, and E. F is for farming. We're not going to talk about farming. Schedule C, and if you look at that, it's called profit and loss from business. You could have a profit, you could have a loss. And I'm going to just drive this home a little bit. Let's just say you have $20,000 in total income, and you have $5,000 in expenses. Could be for just that month, or it could be for the entire year. That means you have $15,000 in profit. Don't confuse some of my clients when they look at the spreadsheet. They put all of their W-2 income in there, and all of their income in. And that's not the way it is. Schedule C is just for freelancing, contracting, art income, cash income. It's not, you're your own boss. So when you're working for someone else, you're an employee and you get paid on a W-2. That is not gig work, it's not freelancing. So Schedule C is for non-employee income. And it is the profit on which you will eventually be taxed. In addition, so you might have, could be your side hustle. You might have W-2 income and freelance income, right? So you do still have to keep books for the freelance part. And here it is. So at the top, and this is a spreadsheet that you can edit. And this is just a template for you. So you might have services income, you might have sales income, grants, cash, all kinds of income. And so I've categorized a few things just to help you out. But you can change it, add it, whatever. And then the same with expenses. If you're running a business, you probably have advertising expenses. Or maybe you don't. Actually, social media is great advertising and it's free, right? Unless you're paying for ads. Let's see. And I make up these names, business services. So you might have email costs, cloud storage costs, electronic costs that you may not think about. So don't hesitate to declare your business expenses, because if you don't, you just pay more in taxes, right? And that's why doing it every month is really helpful, because you might forget about the lunch or the coffee that you took someone to, that's a business deduction, or you mixed your personal with your business and you forgot to put an expense on there. Yes.
So how do you recommend separating, like, if, part of your, the services, apps, or things like that are for your household and for your business?
Because whatever comes directly out of your business banking account as an expense, we want that to be cleanly business, right?
Yes.
And then there's going to be crossover, especially your phone and internet, and you're working at home. Figure out, take some time. It could be time-based, it could be, figure out what your proportion is, what's business related. I have clients that are like 80-90% business, they're workaholics. And then I also have some clients that are more like 30, 40, 50% of these expenses they would consider business related. And so that's really up to you. So this is an honor system. You'll have receipts to back it all up, but the likelihood of getting audited by the IRS is pretty low. And to be honest, I'm not going to look at, when I prepare taxes, I don't look very much at the receipts. A lot of people include their receipts, that, you know, everything that went into that spreadsheet. They'll have a folder that just has all the receipts in it. And I'm going to trust that it's all there, you know. So I'm not going to do a full audit where I'm comparing receipt to expense. Nothing like that. So there's an honor system there. Let's see. Materials and supplies, you may or may not have these types of expenses. Insurance. So a moment just for equipment. Small equipment that you buy for less than $2,500, we can just call it small equipment, and we're going to write it all off if that's advantageous. You know, we have options with equipment. Okay, we can do depreciation or not. Most of the time, we can just write it all off if that's the most helpful. Because why do we want to write off our expenses? Lower our taxes, right? But let's just say we're in a year where you're starting up, you bought a lot of stuff, you didn't have much income or even zero income, but you do have a lot of expenses. You might want to depreciate, and that's a term that just means we're just going to deduct it over time. So you'll have less of a loss that particular year, but we'll be able to spread out those expenses in years where you have bigger profit. Let's see. And then equipment that's over $2,500. So if you buy a really expensive laptop or some other, I don't know, kiln or some other big equipment, printer, those we do list as asset equipment, but we can still write them off if it doesn't cost more than $1 million. So a lot of these limitations are for really big businesses, so we can pretty much write off all of our expenses. Let's see. Oh, let's just.
Because there's something that's important. If anybody is going to buy a house and you want more income on your tax returns, you're going to want to claim less, like deduct less expenses. That happened to me. So what I thought and estimated for buying my house last year was actually less because of some of the deductions I took on my consulting. So if there's a year that you want more money, when you go to buy a house the following year, make sure, like, if there's a balance in there for the way that this is going to go. But buying a house, you want more money, now less money, but you also don't want to pay more taxes, so you got to find a bigger term. Also land back, like we shouldn't have to buy a house.
And we're going to see this spreadsheet many times and other parts of it, but here's what I just want to say, because Cara referred to, maybe not doing her taxes every year or just owing so much and being surprised. How often are we surprised by our tax return? Yeah. Okay. You don't have to be surprised. And I don't like to deliver bad news, you know. And that's why I like the whole spreadsheet, because it keeps everyone knowledgeable about where you are financially, me and you. And the nice thing about seeing all of those months in front of you at the same time, which QuickBooks doesn't offer, you see trends. You're like, here's this happened over the summer, and then it resulted in something the next month. And so you can see patterns and trends, and you're like, maybe if I did a little more advertising here or there, it might change the pattern. So I look back at my books, and of course I see everything in the first quarter because I'm a tax professional, and then not much for the rest of the year. Part of that is by design, because I want a lot of free time. But I know, and I pay my taxes early. And you know, when I have all the money and it's still in my bank account, and I make sure that I pay my taxes, so I'm not surprised. And I know my profit at any first of the month. I know what my profit is. Okay. And don't get distracted. Just do it. Just do it. You'll feel good about yourself after you've done your books, believe me. Yes.
When do you have to start paying quarterly?
Great question. Because let's say you've had losses for 6 months, no reason to pay quarterly taxes, right? When you have a significant profit for any given quarter, and I'd say if you're, and this is just a rule of thumb, let's just say for the year, for an entire year, if your profit is 10,000 or more, maybe 8,000 or more, then you would probably prefer to pay quarterly taxes just so you're not stuck with a big bill at the end of the year.
So it's not mandatory?
It's not mandatory. Oh my gosh. You'll get, if you look at really all the fine print on your tax return, there's going to be a penalty for not paying quarterly. It's not that much. It'll be maybe a few $100s. It might be less depending on what your profit, because it's based on percentage. But a lot of people do their bookkeeping on April 14th, file their taxes on April 15th, and that's where there's surprises. Yep.
For quarterly, are you talking about state taxes, right? Or is the
Well, both federal and state. So federal,
feds quarterly too?
absolutely.
I thought the state is the gross receipts tax. New Mexico's maybe.
So there's another type of tax, which is, and every state is different. So every state in the U.S., there are some states that don't charge income tax. They generally, like maybe Tennessee, Florida, even Alaska, I believe, Texas, maybe Wyoming, they don't have state income tax, but generally they have higher sales taxes. And there's this other thing that you're referring to, business taxes. In Tennessee, they call it business tax. But that, yes, there's something that, and in different states, it's based on your gross. Is that right? So even if you have a loss, you're going to pay and it's usually a small percentage, like 1% or something like that, of whatever your gross is, regardless of whether you're profitable or in a loss. You're going to pay that to your state. And I sort of think of that as a type of sales tax, because it won't be on your federal or state tax return. It's just a business cost. Yes?
I think, well, from what I hear from our reservation, I think that there's some confusion about if you're living and working directly from the reservation. I've heard some people say, I don't have to pay federal or state or gross receipt tax or anything. Is there?
I don't know that much. I don't know about what the rules are for if you live on the reservation. I honestly don't know. I would have to research that. Okay. Yep. And if you, that's something I would like to.
We have it, it's actually given back to us. We get it.
We had a question over here.
Yeah.
Is there a difference for filing taxes for profit businesses versus nonprofit businesses?
Yes. If you're classified as a nonprofit, so there's an application that you make with the IRS to become an official nonprofit, and they file a different return. It's called a Form 990, and there's usually no tax to pay. It's called an information return, but that the nonprofit entity might have employees, and or contractors, and they still need to file that and give out 1099s and W-2s to whoever they're paying, so, yeah. Okay, let's switch gears a little bit. How many of you work from your home office or home studio? Okay, what is that? Well, it's a space in your home that you don't have to own your home, you can rent your home, but the way that it's defined is that you use it regularly and exclusively for business purposes. So and it doesn't have to be the whole room. It can be a whole room or even a separate garage or outbuilding. But you just want to measure the part of that space that you are using for work. So if it's your extra bedroom and you have guests coming over or every once in a while, just don't measure that square footage as your business space. So my home office is in the corner of my living room, and I just measure. I put, like virtual masking tape on the floor. It's about 6 by 6. I have my desk and a bookshelf, and that's what I call my home office. And all I do there, as soon as I step over my masking tape, I'm at work. I'm regularly and exclusively. So just don't double. It's not your kitchen table. It's not your sofa. It's not your bed. I do a lot of work in bed with my laptop. Can't claim that. Yeah.
Is it true that it's only up to 300 square feet?
I'm going to say yes.
Okay, 'cause I
Yes.
saw that somewhere.
Yeah.
But I
So
didn't want to use that.
the maximum size under the, it's called the simple method of home office calculation, 300 square feet is the largest size. And your tax deduction will be 5 times 300, it will be $1,500. Has a home office deduction if you're using the simple method. And since, I think it's around 2015 is when they introduced that, because we're familiar with standard mileage rate for cars and vehicles and things. So people were getting surprised by if they had and this is before 2015, but if they had a house that they owned and they had part of it as their home office, they go to sell their home, and they've been using the old method, which includes depreciation and some other things, that they're going to be unpleasantly surprised when they sell their house, because part of their house has a commercial designation, and there's going to be capital gains taxes to pay on that, and recapturing of depreciation. So I just recommend, if you are a homeowner, use the simple method so that you don't get surprised when you sell your home down there. It's a little bit less of a the old method is a pretty big tax deduction, and that's why people like to do that. But don't, just don't. Yeah.
What if you're a renter though?
Same. I mean, so if you're a renter, just square feet. There's no depreciation, no ownership, no nothing. But it's actually a great way to write off a good chunk of your rent. I have a client who's a filmmaker, and half of his living room is literally filled with equipment, and that's his home office. So he writes off a whole bunch of his living space because it is work related.
So what about using, I create visual art in the same space that I create music. So if it's like dual purpose,
That's okay.
you can write it off in your schedule C's.
You know what I would do? If I were doing it, I would just put it all on one Schedule C just for simplicity. Or you can split it in half, but for a minute. At the end of the day, on your Form 1040, it's not going to matter. All of your Schedule Cs are going to be netted out together. Like if you have more than one Schedule C. Let's see. And I mentioned mileage, so that's a standard mileage rate that it does change every year. Right now, it's about 67 cents a mile. And this is your personal vehicle that you're using for business purposes. I think this one is the hardest or the most pain in the butt to track, right? Because you either have to have good notes on your calendar to know where you went that day, or you have there's I've even seen ads on TV for Mile IQ, and I have many clients who use Mile IQ, but that's an app that's not free, but it works really well. So and the standard mileage rate is intended to include like gas and whatever your depreciation is on your car and stuff when it's your personal vehicle. So you don't need to track all of that, just the mileage. And there is a relationship between the mileage that you count as business mileage and your home office. So if you do have a home office and you go from your home office to a gig location business, this is not an employee location, but a freelance location, that would be considered business mileage. If you're running an errand or going to a gig or something, that's business mileage, or even going out of town. What's not business mileage is when you go from home to your W-2 job. That's called commuting, and that is not, it's not a business deduction that goes on your freelancing Schedule C. Some people don't always know if they're an employee or a contractor, and so especially I have a lot of actors who send me like 5 W-2s and 10 1099s, and those W-2 jobs were theater jobs, but they had to be there, so they were considered employees, but they just think of it all as gig work, right? So just know how you're going to get paid and whether you're an employee or not. It'll help you. Yes. Back there.
So I guess my situation is unique. So after work, I go to what you call a gig.
Yeah.
But that's tax deductible. But they said I can't do it from my home to the gig because I don't claim my house as a home office.
That's exactly right.
Just because I have an LLC and I've seen that they can take that, if you have a legal dispute, they can use that asset against you, they can take it away. So I stopped listing my house because I'm a homeowner.
You're a homeowner.
Yeah, as an asset. So I was telling Jessie that if when she gets an LLC, maybe don't list your house because she's a homeowner too. If you get
List your
sued,
house for home office?
Yeah, I don't anymore because I do a lot of my artwork there as well as all my contract work from home. But yeah, but I file with H&R Block, so I really trust my tax preparer.
Yeah. Well, it is correct, and that's what I was just leading up to, that going from your W-2 job location to a gig location, like you just said, is considered business mileage, okay? You have to think of it as office to office to office to work location to gig location, whatever. It's all work, okay? Home to work is commuting, okay? So, but if you go from a gig location to another gig location, that is deductible mileage. It just gets more complicated to remember that. That's all. That's all. Okay.
I have one question, it's kind of a gray area question. Say if you're going to your W-2 job, but you're also doing a business call for your contract work or your other job, can you count that as business mileage while you're driving to your W-2 job?
If you're going from your home office to a gig location, if that's your first stop, then that would be deductible business mileage. Oh my gosh, okay. I need to make some more progress here. Quickly, meals. Travel meals, a little bit different than local meals. Local meals are going to be not you eating on your own in a coffee shop working or whatever. That's not a business meal. That's just you making that choice. A business meal is going to be when you meet with someone, you talk about business or art in the hope that it will lead to something, okay? It's a sort of a low standard, but, make sure you talk about business or something. So travel meals, when you're out of town, when you're overnight, do both, actually. So there's this thing called per diem, and they change. This is another standard rate that you look up, and every location where you're traveling has a different rate. So do save your receipts, because we're gonna calculate. We're gonna take the better deduction, either per diem or what you actually spent on travel meals. And I had a client. They're no longer my client. They're just a mess, but. They were a world touring rock band, and they had so on my spreadsheet, which I'm not showing that part of the spreadsheet, is a section for business travel, and it says what city were you in, how many nights were you there. Their spreadsheet had 365 rows. This is the world touring rock band, and every night they would put what city they were in. Sometimes they came home for a break, like a month in Minnesota, and then they're back out on the road again. So that adds up, okay? So don't hesitate. If you're traveling from out of town, this is business related, you spend 3 nights in Santa Fe, that'll be a per diem deduction. And at the end of the day, it's only 50. It's going to be cut in half. What you get to deduct is cut in half, even if it's a per diem. Question? No? Okay. Yeah, I need to move on. So traveling means staying overnight. So if you go, even if you drive 3 hours for a day trip and come back, you can deduct that mileage, but it's not an overnight per diem. And if you want to look at per diem rates, go to that website. It's published by the government. And I spend a lot of time there looking up the difference between San Francisco and, this small town in Minnesota. So they all have different rates. And this goes on the spreadsheet. Let's see. Okay. And then close to the bottom, home office. I'm just going to repeat. We've got the home office, and that's going to be one, it's not going to be every single month, but rent could change, and utilities. So renters can actually deduct part of their rent, part of their utilities, and their renter's insurance. So where was I? Oh, and then business miles. Oh, the meals. I think that's up in the middle section. So anyway, that's just another tracking item to do every month. Yes?
I had a question about donations. We get a lot of requests for donations as artists, and so I was just wondering how it's treated. So if you have, like, say, $1,000 piece of jewelry or art, or maybe doing a gig, donating that time.
The time you donate, not deductible. The cost of whatever you donate is already a business expense. Okay, there's no more additional. If you make a cash donation to a nonprofit organization, that is a tax deductible item.
So if it's a service, like if you're training someone or doing something like that, that's just time is not, okay. All right.
I thought it was an in-kind donation. You actually fill out, that you're working for them and that you're doing it for free. And you still go through the contract process, but you do it as a donation. Then you can write it off your hourly rate as an in-kind donation. That's what I understand.
That's not my understanding.
Okay.
We had talked earlier about the donating a piece and maybe getting a raise. You want to?
Yeah. So there are, super rich people out there who have art collections, and they might donate their art to a museum or anyone. And that can be a tax deduction because it's been valued. So they'll and the IRS is even just this year wanting that information filed with the tax return. So I had a client a few years ago whose mother had corresponded with a famous author who wrote a famous author, and she donated these the collection of letters which had been appraised and all these archival materials to a library, a college library. And so she was able to write that off because it had a value. So if you get it, it has to be an official appraisal, and I don't know how much an appraisal costs, a few $100s, but if you do that and you know the value of it, then you can write it off. Yeah.
So this might be shady, I don't know.
Yeah.
But let's say that I'm an artist, I get my work appraised and then donate. Could I write that off? Or do I need to be a certain type of different kind of business?
It's a charitable donation.
Okay, perfect.
Well, and let me just say that charitable. Even if I was, I would have been like, yeah.
That's clearly no problem.
I guess the bummer about the charitable donations since the tax laws changed. So charitable donations go on another schedule, not on Schedule C. Goes on Schedule A. What is that? Well, that's called itemized deductions, mortgage interest, real estate taxes are the biggest items on Schedule A, as well as charitable donations. But the actual, there's an alternative. We've heard of standard deduction. Most of us are probably taking standard deduction, but the alternative to that is Schedule A, itemized deductions. And when around 2018, when tax laws changed, a lot of people they essentially doubled the standard deduction, which brought a lot of people off of Schedule A, but they had a better tax deduction with the standard deduction. Charitable donations are on Schedule A, so if you're not exceeding the threshold for a single person, standard deduction is about $13,000 and change. Okay, so once you've exceeded that, then you'll be able to use the Schedule A for additional, tax deductions. That's a difficult concept. I explain that a lot, or have to explain it a lot. Yeah.
So I have a quick question. So I'm a children's book author, but part of the advertising, because I do book giveaways on social media, and I give out like 10 to 15 books a month.
Yeah.
But also issues that like go to the schools when you do book presentations at school, I also donate some of my books to some of the kids as like engagement for the presentations. How do you handle those book giveaways? Is it donation or is it advertising or what is it?
You've already written off the cost, right? The cost is already, is already written off. So there's really nothing further to subtract. Because if you list, you would be double dipping if you subtracted it again.
Okay.
things.
And then the last question to that is, if my work was booked in my standard rate, they cannot afford my standard rate, but I go anyway, and they're only able to afford 22%. Do I do the is it in kind, is that what it's called? We'll ask them to fill that out for me, so I can use it as a tax deduction?
So they paid you 25% of what you thought you were going to get?
What they're supposed to, well, that my standard rate is, if they're like, we're starting with 5%.
Yeah.
But I take it anyway? Just
Yeah.
Because, like, I'm like, okay.
I do that too. It's like, what? So that's what you decided to, your income is your income. Whatever that amount was is your income. There's nothing more to it. Don't make it complicated.
Is the 75% remaining, like,
Remaining 75% of what?
of her total cost of her time? So like if
There's
she-
no cost for time.
No, so what she's trying to say, she does a presentation for $500, she only gets 25%, but it's an understanding that she wants to do an in-kind installation for the rest of the 75%, so she can tax deduct it when it comes to the file.
Well, like I was saying, the time that you donate is not tax deductible. It just means that you lowered your rate. And that's fine. That's,
Because I heard differently from somebody else saying that you need to make sure that you get an in-kind receipt from their business office, because if they can afford your regular rate, then that can be tax deductible, is what her tax return.
well, and that's what she was talking about too. And
We do that with our nonprofit, our organization, with working with early Head Start students. We bring in artists and then we just do an in-kind of what they would charge. And then we can use that in-kind for our grant, as well as they can write that off on their taxes.
I think it makes a lot of sense to, to have all the records of what transpired and what you got and the time that you donated. But I'll just say it again, that it's not deductible. And unless I'm not fully grasping, because the value you're donating it. You're donating your time. That's sort of the nature of it. Of course, the cost of if you have any out-of-pocket costs for that, that's a tax deduction. And I can, if I can maybe dig a little deeper and do some more research, on that. But that's my understanding is that it's your time. Of course, it's valuable, but it's not a tax deduction.
I think it's different when you're working and there's something, like if you're servicing a community that's underserved, there's some, there's just, I can't remember exactly what it is.
Well, let's think about this. Follow the money. What did you actually lose?
A day's work.
Right. You didn't lose any money. You lost
I
time.
lost a day's work, which is money. My time is money. My work is money. I can't make.
Right, but you didn't donate money, and that's really exactly the distinction, because you didn't lose money on that.
Yes, I did, because I wasn't working. I was working for free.
Nothing came out of your pocket. That's just the distinction I'm trying to.
I understand.
Yeah.
Okay, what if you're an S corp? Does that change anything?
Oh, let me see. Yeah. You're really like asking the difficult ones. You're supposed to ask easy questions.
Because you are getting a paycheck.
Well, Yeah, you're paying yourself. Well, I mean, whatever your salary, of course, is deductible from, from your overall profit or whatever your overall, your gross. So your W-2, the wages that you pay yourself but that money actually got paid.
Already, yeah.
It got paid, so. Well, I've already touched on all this. I think the hardest part about being surprised by your tax return at the, when you see it, is that not only as a sole proprietor you're paying federal and state income tax, but you're also paying Social Security and Medicare. That's a lot. That's a lot. And so that's why people get shocked. And that's why being an S corporation does help with that. But in order to be in that zone, you want to have significant profits. I think you want to be more than 40 or 50,000 in profit before that'll help you. Because there's trade-offs. You got to run a payroll and you got to file an S corp tax return. Increased costs, increased admin, just more hassle in general. And then just real quickly, line 8 is where your self-employment income goes. If you're doing your own tax return, it's going to be captured on that line, not line 1, because that's for W-2 income. Quickly, quarterly, when profit, here's the answer to that earlier question. When profit is greater than about $10,000, paying estimated quarterly taxes is probably desirable. How to calculate it? Figure your profit. Take about, and this is for medium tax brackets, 15% of profits, send that to the IRS. And if your state has taxes your income, 3 to 5% to the state. If you're in a higher tax bracket, or if you have a spouse that makes a lot of money, you are in a higher tax bracket, so you might want to set aside 20 or 30%. And pay your quarterly taxes before like for example, June 15th is coming up. Pay it before June 15th, because if it's after June 15th, it's going to end up in the third quarter. And I do recommend paying the fourth quarter in December, even if it's the end of December, just so no one is confused about what year, especially the IRS, because sometimes if you make a January payment and you don't tag it correctly, they don't always know what your intentions are. And then just real quickly, this is just recapping time management. Set up your separate bank account, measure your home office, do your 2 hours a month of bookkeeping and mileage tracking, but don't get, 2 hours, that's all, 2 hours a month. That's all you got to do. Don't be overwhelmed. If you just tackle it, then and you'll be happy. You'll be happy. Oh, okay, I'll skip the part about retirement, but one way of reducing your taxes is to pay yourself before you pay the government. Put money in retirement, you can use it later, and it will lower your taxes. Okay. And I'd be happy to talk to anyone, afterwards. You can contact me through my website. Free 30 minutes, write down all your questions. I'll go over, and this is just, I like to do outreach and answer all your questions, so feel free to do that. And then this is just real quickly, if you're doing your taxes on your own and you want a low-cost website, so there's Free File out there for very, very simple tax returns. This one is called 1040.com. They make my tax software, but they charge, I think it's still $25 flat fee for any personal tax return. Okay, that's it. Okay. Thank you.